The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We will start the show today with crude oil. Folks, I think this astrological stuff that we had with the full moon on the 23rd and then the Mercury going into direct station on the 25th, I think it's very important. The reason why we hit so many things happening, and also we had a monster day to the downside in Asia with Shanghai down 7%. We were down almost 5% in Hong Kong. And that's a really nasty sign. Now, if they can hold that level, and the Hang Seng did not break out that last week's low, which was a 1.618 expansion, we've got a chance here for a rally. And I'll go into these transits a little bit. But first, I wanted to go over the crude oil. The first chart I posted in here is the one I posted early in the morning. Yesterday, the market made a 382 retracement down at that 32 level and then rallied up $1 a barrel and then made a beautiful ABCD. And you can see the 20-minute line on here. That's that green trend line all on the way down. So what I want to do now is just to show you what happened with this line. And if I can get it, there we go. We'll put it up here and we'll take a look at it. You'll see that it went right down exactly to the 61% retracement of that whole move. And so that, and there was also an ABCD pattern there at that time, and we were able to rally a little over $1 a barrel. Now, $1 a barrel isn't much, but realize, we've rallied from $29 a barrel up to $34 a barrel. We rallied $5 a barrel in 2 days. This is a market that's being hit with news like you can't believe. There was another news flash on Bloomberg today. They had a specialist on, and he announced to the world that there was an oversupply of crude oil. I don't know where he's been. He must have been on a trip to Mazatlan or someplace like that, because this is pretty well known. Even my gardener, and I don't have any garden, told me that there's a supply of crude oil. Anyway, with gasoline's $1.63 here in Tucson, which is I can't remember it being that low, even back in 1999. I'm sure it was, because oil was $10 a barrel at that time, but that's beyond my recollection. The only thing I remember about that bottom in 1999 is Mark Douglas and I were doing a little seminar here for some of our friends right here in the subdivision where Sarah and I live. We have a beautiful community center. We have a private meeting room there. It has a large screen TV, everything you need to do a meeting, great internet. So we had about 20 people there that we had known from Chicago and New York, and we were all talking about the markets and stuff for the whole day. And the main thing we were watching was a 3-drive to a bottom pattern in oil at 1083 per barrel. And that was in January of 99, and that was one heck of a move from 99, from 1083 up to 144. And if you remember, at 144, Goldman Sachs had put out a special report looking for $200 a barrel oil. So you got to pay attention to that, because sometimes that's not the way it is. Now I'm going to show you something. We've talked about this many times, and that's the correlation between the crude oil and the Canadian dollar. And here's what I'd like to show you. This is a chart going back. It's an hourly chart, so it goes back just about 3.5 weeks, which is really good. But you'll notice that last night, when we were making that 61% retracement on the downside to $30 a barrel in the crude oil, you'll notice that the Canadian dollar had made a perfect 382 retracement up to that 143.26 level. That was the exact number, and it's backed off well over 130 pips since that time. So that's telling us that there's probably something really significant happening in crude oil and also the Canadian dollar. And Canadian's one of the major currencies in the world, so this is really an amazing correlation, folks, because it really goes to the heart that the fact that these things are intertwined with a relationship correlation that is just absolutely unbelievable. Okay, now we do have another market that is needs our attention, because we are very, very close to something really big happening in that also. If you'll give me 1 second, I'll pull it up. And that's the gold market. And I wanted to bring this up because we've been two things I want to show you here in the gold from a pattern recognition spot here. If you'll notice here on this 4-hour chart that goes back since late December of last year and all in the beginning of this year, as you can see, we have this 3-drive pattern that's occurring last night. We were looking for it to get up to about 119 and change. We got up to 118 and change. We're just a little below that right now, not doing very much, but there's 3 drives moving up to that area. So this is another pattern that is very important, and it's just a pattern. If you look to the left side of this chart, folks, you'll see the exact opposite on the downside. You'll see the 3-drive pattern coming on the downside when we were making a bottom down there at the 1044 level. That's when we were making new lows in silver and new lows in platinum. We hadn't done that in gold, and now we've had this pretty good pattern completing. Now, remember, from those of you that get the newsletter and stuff, the long-term projection that we've been looking at here in gold over the past few months is that it's had these $70 moves. And as you can see here, since December 1st, we've had these rising bottoms and rising tops, which means we're in an uptrend. And this rally should get to around 1130. Well, we've got to 1118 and change. Now, whether that's going to be close enough, I don't know, but that is a 50% retracement, excuse me, of the move that started back in October. And you can see that one was a beautiful one. That's where you had the beautiful ABCD pattern at 1192. That was absolutely perfect in time and price, and that led us to the down move that we got at the 1044 level. Still higher than we were a year and a half ago when we hit the 1038 level. So gold still has a chance in here, and platinum has risen and started to look pretty good also. It's had a really good move here of about $50 an ounce over the last few days, and that's another positive sign. Now, I wanted to switch over and just talk about silver a little bit, because we're in the same situation now in silver like we are in gold, and all we need silver to do is get above the what you call it. We'll get above, just 1 second here. We'll get above the area here in the 1450 area. We've got a chance for a potential breakout. Now, if you remember, we had that neural net projection from Larry Edelson, and this should be a time where we should be topping in gold right in here on January the 25th or 26th. So let's pay attention to that, because that cycle has been absolutely spot on since it was sent to me in late November. So actually it was early December when I first saw it. So it's there should be an update of that, and I'll have to double check that and see if we get 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks. The next chart that I've posted here into Tiger TV is the transit chart that we get from Shane Smolian, and it's showing basically what that means is when you're below the line like we are right now, is that you have some negativity, and as you can see, that's ending, and then we have some positive stuff happening for the next couple of weeks. Now, this goes along with the cycle theory that we look at, which is known as the astroharmonics, or whatever word you'd like to use. But it's just a probability, folks. That's all it is. You have to use the patterns in order to try to, get you to the promised land, because the cycles themselves, we don't know where they're going. We don't know where anything's going, actually. What you're going to try to do is to make an assessment of where you think it's going based on the patterns, and looking what's happening with all these A, B, C, D patterns that we've had everywhere. It's really amazing that they're all coming together at the same time, much like they did in October of 2014, and then near the high when we had back in May. So the overall long-term picture of the market is still bearish, but we have a lot of folks out there that are bearish now, and so we've got to correct that, I would think. And so a nice 3-week rally here into February 10th would really be ideal. That'll tell us a whole lot of what's going to happen for the rest of the year, in my opinion. If we don't rally very much from this level, then we've got a chance. I thought last night, I was up quite a bit last night because I was watching what was happening in China and Hong Kong, because we have so many friends in Hong Kong, and fortunately they're not on the wrong side of the market there. Quite a few of them are on the right side of the market, and we were recommending that they cover their shorts into this big down move in the Hang Seng, and there is a possibility the thing could just literally melt down. But when you looked at what was happening with Germany and you looked at what was happening with the United States, I mean, this was really they were not taking any effect of what was going on, with the markets in Asia. They just actually really didn't care. So that's the main thing that you got to keep in mind, that it's a global basis, global markets that we're looking at here. I want to bring up the DAX here because that's really a very heavily traded, and I have to go into one of the main DAX stocks here, which is Deutsche Bank, because there's serious problems over there in Germany, folks. But this is the German DAX, and you'll see the ABCD pattern that we made down on the 20th, when we were collapsing at 1804 in the S&P. Then we rallied 100 handles up to 1904. We backed off to a 50% retracement last night, just like the DAX did, to the exact penny. If you'll notice on this DAX chart, you'll see the two ABCD patterns that took it up into that resistance level. So anything, if we can get above 9,900 in the DAX, this has got a chance for some more of a rally. Now let's get to Deutsche Bank and take a look at this, because this is going to be in the news in the near future. I mean, no one's paying any attention to it now. It keeps going down, but nobody says much about it. But folks, this thing is going to be a $5 stock, and they're going to be bailed out. There's no question about it. I mean, this is the start over the last year from 2015. If you did the long-term chart going back to 2008, this says the stock could go to zero. And it could very easily, because this stock looks exactly like the stock of Lehman Brothers back in October of 2008. I can remember Lehman Brothers trading at 19, and I mentioned this before. One of my good friends, he was the second largest broker for Bear Stearns, and he had a huge portfolio. And I told him, I said, look, this was when Bear Stearns was 103, he had $4.5 million just in his one profit sharing thing. He had several of them, but just one, he had $4.5 million. And I told him, I said, just hedge part of it. Well, he did. And of course, Bear Stearns went to $2 a share, and he ended up salvaging about $1.5 million out of the $4.5 million instead of losing it all. He did come out of it okay. He's never had to worry about bouncing, because he's been on a exponential run his whole trading life. So everything's been well. He's a money manager. He doesn't trade. All he does is place money with folks. But anyway, Deutsche Bank looks like it's heading into the El Tolito, so it doesn't look like a very good stock to own. As a matter of fact, as of this morning, it is trading near $16 a share over in the UK. So it's even gapped down one more time. So there's big problems, really big problems over there at Deutsche Bank. I know they're laying off people, they're paying fines, and along with the fines, JP Morgan paid another $1.4 billion to settle claims on their Lehman Brothers takeover, or the stuff that they bought from Lehman Brothers. So you can imagine some of the things that are happening, with things that go on. I mean, to see that what I think JP Morgan paid, I think $19 billion in fines in the last 2 years, and not one person has gone to jail. Boy, that's a real tribute to Sarbanes-Oxley and all the other stuff. I imagine the boys from the 1930s would really be rolling over when they heard something like that. So we'll see what's happening when it goes. Okay, now one question that we had is about Apple's earnings. I have no idea. The guesses are supposed to be pretty good. However, my feeling is that we're going to be looking at a situation where they're probably already discounted. But remember, a few months ago, this stock, and we've been saying it for months, they were getting every day, they were being bombarded about the greatest stock in the world, and it was down for the year. Hello? Wow, what else does it need to tell you? Something's not right. And if you think the iPhones are wonderful products, folks, but we've had wonderful products before. Let's try the Polaroid camera. That was a big one. I mean, look at this. I mean, Eastman Kodak. I mean, one of the greatest companies in the world. They don't exist anymore. And, this is, things change. You don't realize this, but in a book called Only Yesterday, written in the 1930s, they talk about things that were going on. Remember, the 30s, we had electricity, indoors toilets, automobiles, and a thing called the telephone. I mean, all this was some of the greatest inventions, and yet, we were in a terrible depression for 8 or 9 years. So you got to remember that these cycles go up and down, and what the Fed has done is not good. I'll still go to that big casino in the sky saying that they made a bad mistake on that one, but we'll be able to see that into the future sometime. But we'll have to to wait and see what happens with that. One of the questions that someone's asked me is about the gold. Gold has a chance to make it here. I think we're going to back off from this level here somewhere between 11.18 that we hit today and 11.30, 11.35 if we have one more jump. And then we'll back off and we'll see if we have one more chance to do that. The reason I say that is the platinum and the silver are also holding up, so there's still a chance. They haven't broken down like oil has. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the flag is up and down the stretch they come. And it looks like we're going to be opening higher here in the S&P. pay particular attention, folks, to the 1882 level in the S&P, because that'll be a 61% retracement from the big move that we had on the way up on Friday, and then the big down move yesterday. The 61% retracement comes in at 1882, I believe. So if we can pop through that, then we got a chance at maybe attacking the 786 and maybe even getting above 1904, because if we are correct, and we certainly don't know whether we are or not, and we as me, because I'm the one that's making my jaws move, but it looks like these aspects are turning positive for a little bit. They're still not turning positive in the press. When that happens, you'll probably see some pretty big moves. Remember, we had a 500-point move on the Dow. We thought that was going to happen because, you know, back about 18 months ago, we had our first 350-point move down, and we knew that sometime in the future we would be looking at a 1.618 of that move, which we did get with the Dow down 530 points on the 20th. That was the day when the, if you remember, the IWM, the small caps, actually closed higher on that day, much like they did on August the 15th of 2014. This market's got so many characteristics of what happened back then that it's amazing. And then when you look at the Deutsche Bank chart and realize how much it looks like Lehman Brothers, which was the largest bankruptcy in the history of the United States, that will really be you know, that's really scary when you see that. And when you look at the records that have been broken, you know, the worst January the first trading day in January ever, one of the worst starts in January ever. I mean, these are really ominous signs. And looking at it as a technician, you can see these really wide, long-ranging bars, you know, coming off of that 5-point reverse wave that we've looked at so many times, that you know, was so perfectly symmetrical, and which I'll show in just a minute. But right now, what I wanted to show is the chart of the 30-year Treasury bond. This is a chart from my friend Tim Boast. He's an astrologer down in Sarasota, Florida. He does a lot of long-term work. I've known him for quite a while, but this just shows the big cycle, which was related to the Saturn square of Neptune, and as you can see, it has some pretty good correlations with what's happening, you know, in the interest rate markets. And if you'll look at that Treasury yield on the far right, where it is in 2015, where we are now, you can see that three drive to a bottom pattern on this long-term yield, which means yields should start to go higher. So we'll see what's happening. If you'll notice in that big move that we had in 1980 when rates got up to 15%, that was a 786 retracement going back to the panic of 1837. Folks, in 2008, 2007, I became, you know, I was extremely bearish. But the main thing is that what we're watching here, and in 1837, was a long-term cycle with Saturn and Neptune, very similar to the one we're looking at, but it was a conjunction. And this was the panic of 1837. And I believe that this is the type of scenario that we're in. It's just taken an extra 8 or 9 years to extricate itself. But if you get a chance, go in and Google the panic of 1837 and read about it, because it's really interesting. It's about corruption at its finest. It was the destruction of the second U.S. bank, which was the Federal Reserve. That's what it was before that time. The Federal Reserve came into being on December the 26th in 1913 at Jekyll Island. And so that was the main thing. And of course, you know, it's a private bank, you know, that works for us, but it's basically a private bank. But if you get a chance, you should read about it, because it's history, and it's really see how it will end up. Okay. Someone's asked a question about the banking index. The banking index, of course, is being hit. You'll notice that they talked about the billionaires that weren't as rich as they once were, and yesterday we made new lows in the banking index. We went down and hit the long-term 1.618 expansion. If you'll remember, The same thing happened to the Dow Jones Transportations when it was down, ended up having a 350-point move on the 20th. That was another index that closed up that day that tells us that we should be, pretty much near a bottom. So this 1.618 on the banking index should also be telling us that we should be at a pretty good bottom in stocks for a little bit of a rally. And you're talking to somebody who's relatively bearish. Long term, we're going to see how this thing unfolds. But right now, it looks to me like we do have it set up that we could have a little bit of a rally. Well, we popped above our 61% retracement now in the S&P. That's a really good sign. We've got crude oil moving up. It's jumped $1.50 a barrel this morning, and we've got the Canadian dollar is starting to gain on the U.S. dollar again, which is a good sign. So things are lining up pretty good. One other market that we need to talk about a little bit here is the Treasury bond and Treasury note market, because last night we made a 786 retracement on the long-term 30-year bond up at that 161 level, and we're trading 1.5 handles under that already too. So these things are starting to fit together a little bit better. It might have been the panic in China last night and the panic in Hong Kong that actually maybe put in the last bottom. I'm not sure, but the fact that we couldn't collapse when that was going on was really amazing to me. And when the German DAX opens at 2 in the morning here in Tucson, I wanted to see what the opening was, because I was expecting it to really get hit, and gee, I was really surprised. It could only back off to a 50% retracement very quietly, just like we were doing in the S&P and the Dow E-mini, and the Nasdaq couldn't even make a 50% retracement. So, and then it started a little grinding way up and grinding and grinding and grinding, and before you know it, you're up 30 points in the S&P from the bottom. So that's what we're looking at today. So it's going to be an interesting day, as they say in the trade, but we'll go from there. Tomorrow, I'm going to try to have Rich Anderson on our program. I'm trying to get in touch with the guy. When it's wintertime, you never know where he is, because he gets out of that cold Minnesota weather and goes to Florida. And on Thursday, of course, I'm going to have my mentor and my very good friend, John Hill from Futures Truth, will be our guest. And I was talking to John again this morning, and we were talking about the fact that when we were first trading together back in the 1970, 1971, we used ticker tapes from the Chicago Mercantile Exchange and the Chicago Board of Trade. You would get the ticker tapes from Western Union coming in, and they would go into a paper basket, and then you had to change the tape usually every other day. And those machines now are really incredible collector's item. I gave mine to charity. I didn't think it was going to be worth much, but it turned out to be a pretty big antique item. So we'll see what's going to happen here. It's 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we've been open about 18 minutes here. 12 minutes. And the high in the S&P was within 1 point of the exact 61% retracement. The high of the day, 1885.5, and the Fib number was 1884.5, and we're now about 6 points under that. So that's going to be an interesting number to watch this morning, because we did rally a good 30 handles off of the bottom. So it's going to be very important today. As long as we don't, take out those lows from last night at 1851, then there's still a possibility of that, of course, because the low part of this cycle actually comes in on the 27th, and of course we're within 1 day of that, which is pretty close. You can't get much closer than that, but wait and see. But we did hit that number, and believe me, there are people that look at those numbers, and that gives them a pretty good chance. And anytime you have the market, opening higher, of course it's not substantially higher today. There are people that come in and sell that higher opening, just like they buy the lower opening, and that's just one of the strategies that people use when they're dealing with the opening price. And the opening price is something that John Hill and I worked on in 1980 together back in Hendersonville, North Carolina. I used to go down there every other weekend from Chicago, up there in those beautiful mountains, and spend some time with him, usually for a week at a time. And I had a new sports car, and his son Lundy was 16 years old, and so I tossed him the keys. Of course, his dad didn't know that. I thought it would be okay because he had a driver's license. Just because he had a license didn't mean he knew how to drive. He didn't understand how to drive a stick shift, and it was it ended up costing a couple bucks, but we had a lot of fun and wonderful memories from it, so it's not a big deal. Okay, but you have to be on the show on Thursday when we have John on, because he's a real special person. He's helped so many people through the years in the markets. I was speaking with Larry Williams, and he was also one of the folks that John had helped him also. But he's just a wonderful guy. He's got a fabulous library and a wonderful family. So we'll have him on the show here. So we need to get the S&P above that 1880 level. I think, to get it going. But right now we've held really well. That 1804 held, very nicely. We made a 50% pullback. That in itself would take it up another 100 handles to 1950. That won't happen overnight, but that would be the ABCD pattern if this pattern over the last 3 days continues to unleash or unfold like we think it's going to do. We have a question in the den about the gold forecast that I've been talking about. The main thing, it was not a Corvette, it was a Porsche, but I wouldn't give a 16-year-old Corvette to anybody. I wouldn't give a Corvette to anybody, old or new, that was 16 years old. Those cars are too powerful, especially the ones nowadays. I will tell you that the story, when my daughter was 16, I bought her a Pontiac. I don't remember exactly what it was. It was a little 6-cylinder, beautiful car. And we got it on a Saturday. She drove her sister and her 2 friends to school on Monday. And coming home on Monday, she went through, no, it was not a GTO. She went through a red light, hit a lady with 2 little kids who was pregnant, hit her broadsided and destroyed the car and destroyed the Pontiac. And all 7 people didn't even have a scratch on them, not one scratch. The lady was a neighbor friend of ours, but when we were driving back from the emergency room, I'm bringing these 4 girls home, and my daughter says, "Dad, can we stop at the Pontiac dealership and get a new car?" I said no. A couple months later, we finally, I think it was a J2000 is what it was. I'm not exactly sure, but I ended up buying her a little 4-cylinder Mustang, used one, later, that she drove for quite a while. But it was an old lucky day in the old Pesavento house that day when you have a wreck like that, and nobody got hurt. So it was really quite lucky. Okay, get back to the markets here, because sometimes they are not as lucky. We've had a pretty good rally here. We've had bounced around. We came from 85 down to 78 in the S&P. Now we're still bouncing around, trying to discover, where we're going to go. But we've had some key things in the currencies last night, folks. That Canadian dollar making the 382, the British pound made a beautiful ABCD retracement at the 61% retracement down there at the 140, 180 level. We've rallied 100 pips off of that, which gives us a spot to tell us that this is, what we're looking at, and then we'll find, what's going to happen, from that level. But the key level to watch is that 1885 in the S&P. We need to get above that substantially in order to get the trend moving, in the right direction. There should be some support in the S&P in the first hour of trading, and it takes a while, for the things to, unsettle. But somewhere between 1876 and 1873, we should run into some pretty good support. It might not be as good as you might think, but, if you do it, your risk is only about 5 points at the max. So, kind of keep an eye on that if you have a bullish flavor in your hairpin today, and you'll be able to see if that's going to be the case. I've had a question in the den about the grain markets. Folks, they're in just a really tight consolidation in corn, wheat, and beans. The good thing is they're having higher bottoms, slightly higher highs in corn, and also in beans, but not so in wheat. But we're getting ready to maybe one more jab down, and we'll complete a really nice pattern there, and then we'll look at it. And there's some strong seasonals for the grains to rally in the early part of the year, right in before we have the planting intentions, which will come out, sometime in March. So we'll see what's going off. Now we've just come down to the 1875 level, and we'll see if this is going to hold the S&P. But we've come down so quickly from that Fibonacci number at 1885. I would think we're probably going to go down. Let's just quickly look at this and see what the next level is that we would want to be watching It should hold right about here, but we'll wait and see. The one that would even be more important than that one would be the level at around 1872. That would be one that'd be a 3/8 retracement of this whole move that we had last night from 1852 up to 1885 and change. So watch that level of 1872. That'll be important, I think, because if we get below that, we could come all the way down. Hey, we could make new lows. We could go below 1852 and go all the way down to 1841, which would be an ABCD of this whole move, and it would be right at a 786 retracement of the whole move from 1804 to 1904. So, wow. As they say in the trade, in the Chinese curse, may you live in interesting times. We have a new moon coming up here on the 9th of February. It will also be the Chinese New Year. It's the year of the monkey. I'm not going to say anything about that. I'm just going to let it pass. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we had a request to take a look at the euro versus the U.S. dollar. This goes back the last 8 months, and you can see the high that we made back in August. And we made the Gartley pattern that was a perfect ABCD pattern at the 115 level. Then the market collapsed, and as you can see, it made a beautiful 3-drive to a bottom pattern right into the time when the Federal Reserve came out at the end of the year. And then they raised rates. The market rallied, and then you'll notice the euro has made these 2 lower tops here. It's a 135 pattern, and the high between 1, 3, and 5 are equal, and that gives us a price objective of about 106.20. And last night we had a 78% retracement of the high from the previous day. Up at that 108 and change level, 108.65, I believe, or 70, and then we've sold off a little bit, not very much, just about 50 pips. But this, what it looks like in the euro, is that we're going to come down to this 106.20 level is what I'll be looking about. And one other question about the grains has just come up. They're just not ready, folks. I mean, the action is happening in stocks and bonds and foreign currencies and crude oil. That's where the action is happening. That's what we should focus on. And so that's what I'm trying to do. But we will get to the grains. They're just very, very quiet. They'll either sell off one more time or perk themselves to the upside. But right now, there's just not any pattern there. There's some seasonals that'll start to come in here around the 1st of February in a week. And I'll be working on that over the weekend. But right now, they're just not ready. It's just be patient. And, look at gold. I mean, we could have gold breaking out here. Even if gold gets much above 1130 with a long-ranging wide bar and some buying coming in, and silver gets to $15, there's a whole new ball game, because then you're going to be breaking any of the rallies highs that we had going back to when it was at 1192. So you want to be that's where the players are. So it's 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.